All right, everybody, Economic Ninja here. I'm trying to secure some better facilities and find my editor. I don't know, he's out just gallivanting around, so we're gonna do this sort of a down and dirty style. So this is a Q&A about the Wells Fargo decision to cut off lines of credit. It's a Q&A, and so we're trying to get better facilities so I can start putting things up so that you guys can read it as well. But I've got my notes, so I got my notes. We're gonna work on that. But it's Q&A because there's a lot of confusion. This is big news, actually, because this is something I've been warning people about for quite some time. Just so you know, people are trying to justify it, saying, well, Wells Fargo isn't that big. This is just one bank. It's just one off, but it actually isn't. It's the beginning of a credit pop. And to what I believe will be, and this isn't financial advice, I'm just a dude with a bro hawk and a dream. But I believe this is gonna lead to the greatest deflationary event. And I have a really cool, if you think the dollar milkshake theory is pretty sweet, well, get ready for what you're about to experience with the Economic Ninja here pretty soon. So anyway, we're gonna start this right now. So I got my notes. There's a lot of notes, so we're gonna have to go. All right, so first off, this is not HELOCs, okay? HELOC, first off, stands for Home Equity Line of Credit. That's where if I had my editor, he'd put that stuff up. It'd be super cool. Where I'd say, hey, editor, put this up. But it's not home equity lines of credit, okay? Now, just so you know, we're gonna go into what happened with me in 2008. I explained the story, but I'm gonna go in a little more depth. At that time, when I was selling my homes, I had a lot of HELOCs open on multiple homes I still owned. And I had them open with zero balances in them because I wanted them for the ability during that credit bubble pop, which did happen, definitely took off in the summer of 2008. I wanted to be able to take advantage of the situation. Now, a lot of people ask, how do you take advantage of a situation like that? Well, when credit dries up, what happens is prices lower because people don't have access to cheap money, easy liquidity of credit to speculate in all kinds of different markets. I ironically found myself in the tractor business pretty quick, buying heavy equipment from contractors that didn't understand where they were in this market cycle, the real estate cycle, and the construction cycle, and started buying up heavy equipment. Well, I used HELOCs for that. So in that story, and you know what, let's stop right here. If you haven't seen the video that just came out, it seems to be going pretty viral, at least by my standards. Stop it right now. Stop this video right now, and I'm gonna put up one of those really fancy flags that show you, hey, go to this video, click on that. Click on that, go watch that first, and then come back with even more questions of what's going on with the Wells Fargo thing. So HELOC, I had one, and so I had a zero balance. So what I did is the day that it was announced on CNBC that banks were gonna start freezing HELOCs, I literally got up from the restaurant, ran down the street. I kept my checkbook with me because honestly, back then, you wouldn't believe where you could find deals. It was just, and that's why you need liquidity. You need money to take advantage of that. You're about to see this in real life in about 90 days. So I ran down to Wells Fargo. The HELOC was with Citibank, and I wrote a check to myself and deposited it in Wells Fargo. Ironically, we're talking about Wells Fargo freezing lines of credit today. So then I immediately now, next month, had to pay a payment with my Citibank HELOC, okay? So there's the answer to the next question, okay? Let's see. If I have to, do I pay on the loan that I just wrote the check out of? Okay. Well, I also got a question like, what do you mean write a check? All right, so personal lines of credit are what people use, and we're gonna stick with me too, because we're gonna get to well, hold on, implications of this situation too with the economy. So personal lines of credit are used for various different things. They're used for people to maintain liquidity going month to month. People that are paycheck to paycheck might have one open. They don't use it unless they need it. Some people use it for their businesses, even though it's a personal line of credit. It is unsecured. So whereas a HELOC is secured by some type of property, and it's actually home, that's what it stands for, Home Equity Line of Credit. That's what the acronym HELOC came from. A personal line of credit is not secured by anything. So it actually has different terms than a HELOC, mainly a higher interest rate and shorter term, okay? So a lot of people, the way they run their businesses, they will also have a personal line of credit because it's harder to get a business line of credit in some instances, especially with small businesses that are just starting out. They'll run a personal line of credit and they'll have that off to the side to backstop any issues with invoice factoring. It's like they almost become their own invoice factoring company. That's probably a lot of people are probably like eyeballs running back in the back of their head. It's actually how the banks make most of their money. So we'll talk about invoice factoring later on in life. All right, so that was the question. Why'd they write the check? Transferred. Okay, so they said, why would you write a check? And I said, well, it's because I transferred it to another bank account, so they couldn't freeze that account. Now, I transferred it into a normal bank account, so obviously that bank, the banks weren't saying, hey, you can't have your funds unless you're in Washington Mutual. Was it Washington Mutual? Comment below, I don't remember. There was a lot of chaos back then. But my point being is that this does not affect HELOCs. Okay, long story short, it also does not affect credit cards. Credit cards are a totally different type of lending, okay? Again, different terms, different interest rates, everything, okay? So it's not gonna, your Wells Fargo credit card is not gonna be affected. It does not affect your bank account. I think someone down here asked, there's really writing on here, I'm not even joking around. Will it affect my bank account? I have a Wells Fargo bank account. It does not affect your bank account, okay? We haven't gotten to that point yet. All right, so then, all right, so implications. This is the most important part, I think. And it sounds interesting because half of you are going, why am I listening to this dude with a big piece of cardboard? Well, so I got to keep my notes somewhere. I don't have anywhere to, do you see anywhere I can put them? First off, this is the implications. Right now, just like with the Great Depression, and I'm going to start reading stories from the Great Depression, there is a lot of speculation in markets. And in the Roaring 20s, we saw a time of very accelerated growth in all kinds of assets and industries because of easy, cheap money. This came because of the consequence of the Depression of 1920. If you don't know about the Depression of 1920, go check it out. It allowed the Federal Reserve to walk in and freely open the floodgates, and the government, cheered it on, okay? So there's gonna be less speculation, all right? Now, Wells Fargo, in my personal opinion, this isn't financial advice, I'm just an investor, I'm just a dude with a bro hawk and a dream. But I don't think they're gonna be the only bank, all right? I do believe you're gonna see a slow cascading effect. Remember, Bear Stearns closed its doors. It was worth, I wanna say, about $20 billion, their market cap. I could be wrong about that, but again, that's not in my notes. I don't have editing, so I can't look super smart in front of you. I'm just going off the cuff. When they closed their doors in the spring, it sounds funny, but I was screaming like crazy to all my friends and family, anyone that would hear me, and everyone thought I was a joke. That started a ripple effect into Lehman Brothers. And it wasn't just Lehman, there was other hedge funds. There was all kinds of places that were going insolvent. I know of one personally. And so my point being is that I do not believe this is a one-off event. This is a marker in time where we'll be later on going, Wells Fargo. It's just like a few banks that you guys are probably putting in the comments below that were affected in hedge funds in 2008. I've already seen some of those comments. They're great comments and questions. I've gotten some amazing emails. And we're gonna be doing some stories. We're gonna be highlighting your stories here pretty shortly. So hopefully I've answered your questions. I have gotten some calls from some actually pretty prominent people just today and said, hey, what do you think I should do? And I'm not giving financial advice. I do consulting for them sometimes, but they actually have some personal lines. And I said, well, do you need them? They said, I want them. I said, can you pay the payment? I said, yeah. I said, you may want to consider holding on to it. What's the worst that can happen? Nothing happens over the next 90 days and you have to pay the next 90 days in payments on that. What's your payment? What's your downside risk? Well, your downside risk right now, if you take that line and you shift it over in time, well, then you have to pay the payment on it. Now, do I suggest going and getting into debt? No. Do I suggest you having backup plans to be prepared to take advantage of situations? Absolutely. I had this same thing happen to me in 2015. I thought the market was going to collapse because the banking sector was imploding. Most people don't understand what was going on with that. And the Fed announcing they were going to start raising rates at the end of 2015. And I think that was the dot plot plan, and it didn't happen. The Fed was able to intervene, do some really neat shuffling of finances, and it didn't happen. Matter of fact, it started leading into inflation. And so I want to leave you with that. I hope it answered some of your questions. I don't know if I'm gonna be able to find more cardboard. I'm starting to run out of space on these things, but we're gonna see what we can do with these. But yeah, I thank you guys for watching. And if you have any more questions, throw them out there. But just want to rest assured, this isn't the end of the world. This isn't a one-off event. But we're already seeing constricting in the lending markets. We've been seeing that for the last year and a half. So remember, guys, I tell you that this all started September of 2019. And that was when the interbank lending rate exploded to 10.5%. If you don't know what the interbank lending rate is, I highly suggest you, maybe we'll do a whiteboard video on it if I can find one of those, but we'll try and work on that, showing you guys how this all started. And slowly, with this repo facility exploding in value, banks do not want to lend. This is the fact. We have seen the repo facility explode, where banks have put well over $1.4 trillion on deposit with the Fed repo facility because they would rather get a mere half of 1% than loan it out to you, the American people, at let's say 3, 4, 5%. That is the fact. That is a fact showing that the banks are unwilling to lend because they know something that hopefully you know. I know my subscribers know it. And if you guys want to start learning more about that, please subscribe. Thank you for everyone that's tapping that thumbs up button. It helps me get this information out. And thank you to everybody that's sharing this on their Facebook pages, because that seriously is the most important thing. We've got to wake a lot of people up, guys. We don't have a lot of time. But yeah, collapse happens. It's been happening. This is collapse. It's been happening for about a year and a half. And so this is what it looks like. This is what it feels like. It's not too glamorous until all of a sudden what most people think is collapse is the day of panic, when you see the meltdown in the Wall Street Times. So all right, guys, I hope you guys have a Wall Street Times, Wall Street Journal. Jeez, get with it, Ninja. With that being said, guys, I'm gonna walk around awkwardly and turn off my camera. Just gotta get my editor back. I don't know where he is. Bye.